On today's episode, we are going to look at some bullish news for AMD, TSM, and the overall semiconductor market. But before we get started, if this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for a lot of great links, and also check out my new tech channel. So let's get started.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
All right, so first let's take a closer look at the bullish news we have for AMD. There was actually a price target increase for AMD by a big analyst. We can see right now the stock price is up about 2.8%. AMD stock price is currently sitting at $86. Unfortunately, from its 52-week high, the stock is down about 46% at the moment due to kind of numerous things. One of the main reasons is consumer spending decreasing and kind of that influx of graphics cards, which I have talked in previous episodes. So today, June 22nd, analyst Joseph Moore from Morgan Stanley reinstated AMD with an overweight and $103 price target. So this analyst sees further share gain for AMD in notebook and server processors in 2022 and 2023, offsetting industry-wide PC weakness and likely gaming correction in 2023. And if you are a regular in this channel, these are topics I have kind of talked about where I do believe the semiconductor is going to see some form of correction and some huge reductions in the consumer market, but there's still that growth coming in from enterprises, from data centers, and from cloud providers where it could kind of offset. The real question is how much of each will we see, how much of a decline and how much of a growth in the other market. So it is pretty cool to see that others might share the same thoughts that I do. The second company we're going to take a closer look at is Taiwan Semiconductor Manufacturing, ticker TSM. Right now, the stock price is down about 1% as I am recording this episode, but we can see it is trying to pull up. Unfortunately, very similar to AMD, from its 52-week high, the stock is down a nice amount. This one's down roughly 38%. So TSM does really good at kind of informing investors on a monthly basis how revenue is doing. And this is a company that it doesn't seem the chip shortage or consumer spending is really affecting its revenue. We can see for May of 2022, revenue actually grew 65% compared to same time last year or May of 2021. It also saw a month-to-month increase of 7.6%. And for the full year so far of January to May of 2022, revenue has grown about 44.9%. And this is telling me one thing: if consumer spending is decreasing and we are seeing a lot of companies kind of pull back, where is this growth coming from? And the only other possible source could be data centers, cloud providers, and this kind of enterprise spending. And earlier today, a research from TrendForce kind of shares that same mindset. They mentioned that although demand for consumer electronics remain weak, again, something we've talked about, structural growth demand in the semiconductor industry, including for servers, high-performance computing, automotive, and industrial equipments, have not flagged. And they are becoming a key driver for medium and long-term foundry growth. So again, pretty much what we've been saying, where there is a decline in certain markets and there is growth in the other. They even go a little bit more and say that the only instance of revenue decline for foundries have come in the small processors, the 5 to 4 nanometers, due to Apple's iPhone 13 entering the off-season for production stocking. And again, this doesn't necessarily mean that it's bad for Apple. It's just this is the off season for that kind of product, so they're not seeing that revenue growth in that market. So here we're just going to take a closer look at TSMC. For the first quarter of 2022, they roughly have 53.6% of the market share for top 10 global foundry revenue rankings. Number 2 is Samsung with 16.3%. So it's insane how such a huge difference is between number 1 and number 2. TSM is just a beast. Samsung was actually the only one in the top 10 that lost revenue quarter over quarter. I do believe Samsung has a little bit more consumer dependent products, and probably they manufacture more chips for consumer compared to TSMC. At the same time, we've also seen some kind of customers leave Samsung. I know Qualcomm has recently left Samsung and is now using TSMC. So again, it just shows more bullish case for TSMC and for the overall industry. So I also do believe this kind of consumer pain is only going to be short term. And short term, I mean, it can obviously last a few months, maybe even a year or two. But in the long-term growth of all these semiconductor companies, I do believe things will eventually change. So for me right now, I do believe it's a great time to continue to accumulate my semiconductor positions and grow my kind of exposure into this market, because I am very bullish in the long term of things. So I hope you guys enjoyed this quick video. Take care, have a good day, and see you next time.